Yeah, guys, sorry, I forgot to adjust the watermark because I use this my recording studio for some other activities, so I forgot to adjust it before I embark on this analysis. So please pardon me, enjoy the video and listen to the sound. Thank you. Yeah, good morning, good afternoon, everyone. Happy Sunday, happy new month. Wow, it's a wonderful day. I'm happy, and that is the key. No matter the situation, no matter what you are passing through, always make an environment that give you joy. Always make yourself happy even when this is not going as planned. Believe in yourself that all these challenges can always be a temporary things. They will come and they will go. You understand? Because your heart is not their place where they can stay. So for that alone, it's a evidence that tomorrow will be better. Now we are preparing for another week. We'll be looking into the charts, see the current state of the market, see where the market is expected to go, and keep tab on trading opportunities. Don't give up. See this as opportunity for you to make something better out of life. Even though you have a primary job you are doing, you know, having more than one option is key. Is the wisdom for the wise. You understand? Because few jobs in the world today with the global pandemic is secure. So many people have lost their job, and imagine you have only one option and that option is being taken away from you. You know what that simply means will be an economic crisis in your home. So I indulge everyone, that have desire to be trading the market, trying to make income out of the market, to see it as a good opportunity to have a second option. You understand? So we'll be going into today's, like I said, I do analysis, I explain for the purpose of those who don't even have enough knowledge about the financial markets, how to run analysis. So it will be a form of analysis for the week and be a form of class, to teach people to see, to open people's eyes to see how the market moves, what and what we notice for or before we decide where the market is going. You know, consider so many factors. If you look at before me now, but before I go, please invite your friends. No knowledge is waste. Don't keep it to yourself. That's one thing that normally motivates me. I don't believe in first because my own success will not stop your own. So why do I have to keep information that I know can be beneficial to everyone away from you? So as I'm sharing this information with you, you need to share it with others. Bring in your friends, let them learn. There are several videos I've done in the past. Everything is on my YouTube channel. Let them go to the YouTube channel, subscribe, click a like button and notification button so that anytime, any day we run analysis like this, you can always tap into it and benefit from it. Understand? So uh today I have DJ before me and is on a weekly time frame. One of the things we consider in the market is the market trend. And when you are looking at market trend, you look at market trend on a 1 hour, on a daily time frame. So from daily time frame, you go down. Meanwhile, once in a while, for you to see the key important zone in the market, it's good you check your other higher time frame, like the weekly time frame, which was the reason why I'm seeing weekly time frame here. So looking at DJ as we speak. Another thing is that we have some traders, if market is not on trend, they don't know what to do in the market. They don't know how to trade in the market. So they always wait for market to show a trend. Meanwhile, you spotting market when it's just changing direction is always a big opportunity for you to trade. But few people, or let's say few traders, we understand how to determine this. These are things that I have studied over time, which when market is about to change its direction completely, a market that has been selling, 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 and selling for weeks, for months, and it's about to change direction. It's not always easy. And that's the reason why you don't toy with your price action method. Because with your price action, you can spot a key price level that when market is approaching that level, like I said in price action, history is being created and history repeats itself. What do I mean? If you look at this area where I have my mouse, history was created here. And if you look at the same area here, the history repeats itself. So before the market gets to this area or when it's about approaching this area, your duty is to start having it in mind that there's higher possibilities that market will respect this area, and of course it does, then you make a sell. And imagine this happen on a weekly time frame, which is a very good time frame. The same thing when you look at it on the daily time frame, which majority use, you will see it. Look at the formation. Try to give you a new high after this, then form higher high. And along the line, it came to drop, form a new high here that shows like a consolidation, then drop. But if you look at this, it make a kind of another price level here which react and form a double top around here before coming down. Now along the line, news came in fundamentally and market drop. All these things that happens here is already showing that this market is not breaking this price level anymore at the moment. So, and technically traders already look out for their candlestick chart pattern, their support and resistance key zone, and they are taking the advantage. Now, for the market to now finally sell down to this area, which is signal this support and the support here for this buy. This candle we have here, this is a doji, but this three candle happens to be a morning star, which signal a buy on a daily time frame. Now, for the market to move this way, how do I know that this market is time to sell? Now, on a daily time frame, this market come to this support. Look at this dotted line, the support zone, a resistance zone, and you know it respect this area, then make this sell. But if you look at the candle it formed first, it's a doji candle. This doji candle, it pressure falls below here. So this was a big signal that this market is giving a sell signal. So it's taking a reverse and it happens at the same area where we have a support, a resistance here. And when you look at it, the next candle try to make a further buy, then return that same day. Now, one of the things we look for is a reverse candle. This is a bear candle. We already have it. After the doji, we have the bear candle. And aside that, there what we call Fibonacci. So use my Fibonacci retracement, you know, to checkmate. Looking at it, if I check the Fibonacci here for a sell, the Fibonacci is around, is very close to 78.6%. Even if I go as far as making use of the last buy, the retracement is 61. In fact, it's above. You understand? It's above 61.8%. I'm looking at this dotted line. That's where the market came to before we make this U-turn. Meanwhile, usually by Fibonacci, generally trader look at 50%, which is some people call equilibrium. So when market gets to equilibrium area here, they look for a sell. But to be on the safer side, there's what we call discount area. Discount area is around 61.8%. So this area, if market come to this area, that means it break the 50% stage and come to this area. That is discount area. The key importance is that market at that particular time technically is telling you that the market is overdue for buy. So its buy has stayed too long. So which means the sell supposed to have come in at 50%, but it came further to 61%. So that's why they call it discount, because the buy has stayed too long. So sell is overdue. So with this market now, this is a daily time frame. This is my 50 exponential moving average. If you look at it, aside the fact that you are using your support and resistance, you understand, your double top and double bottom principle, we also use moving average to check our support zone and resistance zone. So for this market to be around this moving average is also another confirmation that is around resistance zone. So which means the candlestick pattern show a sell, the indicator show a sell. The structure of the market shows that the market is at the support area, a resistance area, sorry. I don't know why I keep calling support at resistance area. So it's at resistance area. So this shows that this market technically should experience further sell in the new week. You understand? So all you need to do is to look for a good entry, because this is a daily time frame from where we have this shadow down to here. We will not be letting less than 100 pips. So let me check. Okay, this is 79. This is 79 pips. So with this, if you go to 4 hours time frame, what you are looking for on a 4 hours time frame is an entry opportunity. Is an entry opportunity. And basically, whoever that sell this market last week and still have it here should keep it. Just keep the trade. But if you are not, this market is approaching somewhere around here where I have my mouse here. So which means there's possibility that it might want to move up small before it continues the sell. So you can wait for a small retracement. When you have that small retracement, maybe like 30 pips retracement, or let's say between 20 and 40 pips retracement, which might be coming to somewhere around this shadow again and this shadow. So with this one, if you check the three of them, they're on the same area. So you can take your entry. This is 4 hours time frame. And if I check 1 hour time frame, 1 hour time frame shows that it's like it's trying to move up a bit. So we'll be looking at this area. We'll be looking at this area of this shadow. So you can place an order block somewhere around there. So in case market come to this area, around that time it will be approaching our 50 EMA moving average. Then you book your sell. Because now if you look at what you have on this 1 hour time frame, there's what we call head and shoulder. We started the analysis from the weekly time frame down to daily time frame to 4 hours time frame. Now on head and shoulder, there's what we call neckline. The market broke a neckline, then it's possible it want to move back. So the market already break the neckline. Now the neckline is around this area. This neckline, market already break it. So most traders, or some traders at times, they don't do anything around this area. This is where they act. And this market break this zone now, they will wait for the market to move up. That's a pullback, which let me show you something. Which that same Fibonacci expansion, if I check it now, look at this sell from here to here, which if you look at the 50%, so they will look for market to move 50%. So around this area, they will place their order block. That's for you that miss the trade from here, or you don't take trade around here. So at here, So anytime market come to this area, you will enter the sell and join the trade. Now, some might be looking at, okay, that this head and shoulder is not straight. This head and shoulder and this is head and shoulder. This is a perfect head and shoulder, and this is also a head and shoulder. So if you are looking for perfect head and shoulder, you might not trade for the next 6 months. What you need is the structure. Does the structure give you head and shoulder? If the answer is yes, then you are good to go. You understand? So when you break the neckline around there, when you break the neckline around there and you make a pullback, so many others will happen here. You understand? So it is important that you understand how these things happen. We always say that there is no 100% analysis, and one of the key condition is that technical analysis is not the only analysis method traders use in the financial market. We have people that trade the technical, we have people that trade the fundamental, and we have people that use the two. So the last one is the best, using the two, combining technical analysis with fundamental. Fundamental is purely trading based on news. So when you run your analysis technically and you neglect fundamental, it can result in serious damage of account. So it is important that you understand how it works. I take my time to explain all these things using GJ, because by the time I move to other currency pair, in order to make the analysis for the week encompasses with class short, it will be faster by the time I move to other currencies. You understand? So as it is here now, after all this news, all this analysis, then I will now go to my news. Look for the news for the week. You understand? So look for the news. So maybe as at the time I'm checking news for Monday, for example, did I have a strong news on GJ, on Japanese yen, no strong news, but on GBP there is news around 9:30 in the morning. You understand? And that is the only news on GBP. So what does it implies? For Monday, as an example, you can trade this trade without fear. Why? Is because technically you are good to go. Fundamentally, no issue. So, but let's assume that the news are let's assume that the news are for Monday, they are very strong on JPY and GBP. So you then have your option whether to still take that trade technically, then put your stop loss in a safe place, or you wait, let the news pass, then you enter the trade after the news to be on a safer side. And if the trade play along the line with the technical analysis, that if the news comes in, then you might have to wait further because ordinarily you will have missed the trade opportunity. That's your entry opportunity. So you have to wait to get another opportunity to enter the market. So basically, I've explained how to check your candle from higher time frame, look at the market trend, other factors like head and shoulder, double top, double bottom. You consider using your Fibonacci retracement to check your retracement. You understand? So that is how it works. So as it is now, I am good to go, ticking GJ, expecting more sell. But before I eventually take that sell, I expect GJ to make some pullback. You understand? And this lower time frame. So this pullback, for a trader that is not experienced, you go and take this trade on a buy on a lower time frame. All this movement might not be up to 20-30 pips before you begin a sell. Meanwhile, if you are inexperienced trader and you take this and you set your take profit somewhere around there, it will surprise you that the market will come, give you some profits while you are expecting it to hit the main profit, then it will return and eat up your money. So it is very important that we understand how this analysis work from A to Z. All the factors that signal entries, we check them out, starting from the higher time frame to the lower time frame. So that will be all on GJ. So you wait for a pullback, then you make your sell. So I'll be going to the next analysis to see other currency pair. So I'm returning back to my higher time frame. Let me see what the week has on other time frame. Wow, GJ. I've been monitoring EJ for about 2 months now. Look at this arrow. Look at this arrow. If you look at when I draw this arrow, I spot this analysis where this price is touching the moving average here. And I've been expecting EJ to come here, but it hasn't. This was July 1st. Today makes it 1 month. I've been expecting GJ to come here. Fine, all the way from here is sell, then it go back, make another sell, then it went back, and make another sell. It went back. It's not where I'm expecting it. I'm expecting it here. When it comes here, then we discuss a buy. We discuss a buy. So that's the reason why you exercise a lot of patience in the market. But between here on the 1st and on the 30th, several things has happened. A buy has happened, a sell has happened. But because I'm expecting the market to be more sell sentimentally, my sentiment is always on a sell. So anytime the market goes up, I sell. Anytime the market goes up, I sell. I don't want to take a risk of a buy. You understand? So the only thing that will make trader to book a buy is when news comes in. And when news comes in and it affects either of the currency, it will show the impact That's why we have this buy. And if you look at it, the way it goes up, it will return. So which means technically expectation is still on a sell. So as a result of that, if you are trading, you trade with target. I put the other block here, key zone, but I know I'm on a daily time frame. So usually my own style of trade, I always like to be realistic with myself. So when I'm placing my trade, I always look at 40, 50, 60 pips. When I see it, I take my profit. And those pips, what normally determine it is price level. You understand? For example, I enter the trade, imagine I enter a sell here when it's coming. Because of all this week, I'll put my take profit a little bit before those week. So that in case market want to, because one thing I don't like is I'm seeing profits, it now went back to go and hit my stop loss. I don't like the idea. So why am I in the trade? And I'm not using big accounts that can allow me to, leave my market with a very big stop loss. No. So I run a small account which I use small stop loss like 50 pips, 60 pips. The idea of you trading without stop loss or take profit will destroy your account unless you have multi millions of money in your account and you are using a very small lot size that no matter what happen within the market, it cannot liquidate your account immediately. Which how many of us has that account size? Just few, which are the major player in the market. So you as a retail trader, you are not an hedge fund, you know, and you want to be in the market. So you have to be conscious with the way you look for profit. So you set a small target for yourself. When you meet it, you wait again, look for another opportunity. That's how it works. 20 pips is a big money. 10 pips is a big money. It's not until you have 100 pips on a stretch. It's a good one. But do you have account that allows you to do that? So that's the reason why it is important. Look at this double wick. This double wick shows that there is enough buy, there's more buy on EJ, and look at it, it buy. And based on where this market stop, there is still more buy in this market. So what do you do as a person when you are still looking for a sell? You wait, let the market move very well. But for you to get some level of satisfaction on this sell, you can draw a Fibonacci extension. So which means at all, you are expecting the market to come to somewhere around there. And when you look at it, because that's your 50%. Meanwhile, if it comes around there, you can put your stop loss above 61%. And this around 50%, look at it very well. It will be approaching your moving average, which still signify that okay, your entry for sell is somewhere around up here. You understand? That is the proper way of taking it. But why I fail at times is because sometimes news comes in when that thing is about to happen, then it breaks the market structure. or break the analysis. When it break the analysis like that, it will reset itself. That's why we have correction, consolidation, the market. It will reset itself, then continue its move. Don't forget, you are not the only one in the market. Your analysis is not the only one in the market. Several factors is being considered by trader worldwide. So having a proper knowledge in the industry will give you edge to trade. You understand? So this is the secret that you don't joke with. So as this market is now, I'm expecting it to come to somewhere around there. That's around 50%. Around 50%. Then I'll take the sell opportunity. Euro USD. Euro USD. Euro USD. The analysis I'm seeing here in a daily time frame, you can see on Euro GBP. I didn't even check other time frame. Let me see. Let me see 4 hours. You can see that buy formation. But if you are looking at it on a lower time frame, you might get trick because of this moving average. So that's why it's important that you see your higher time frame. There is still more buy in the market. There is more buy. So I'm looking at somewhere around there, expecting the market to come to somewhere around there. So I will have my other block. Next move. Now looking at this next move, one, I choose this other block because of this key zone here. Look at it. Look at it too. So when market come to this area, this daily time frame works, which means I expect more buy. And looking at this area, you can risk your buy. If you have like 50 pips, you can sacrifice. Risk a buy here, risk a buy here. Look at it. If the market come as low as this area, you can place other block here and target this area. Even if you don't target this area, you can target area here. Then wait for the market to finally come here before you start looking for a sell. This is a daily time frame. You understand? This is a daily time frame. So looking at Euro USD, I'm still expecting more sell. Yeah. So when the sell drop in form of pullback, then we enter the buy opportunity. Meanwhile, let's check the lower time frame. Looking at lower time frame, market broke all this area and comes up and is trying to pull back. Now, if I look at the pullback, 50%, you see it's not on 50%. So 50% is somewhere around there. So if I'm looking at the market coming down further to 50%, let me go back to daily time frame. You see that area that I marked initially, you see this place and here. So I expect the market to come down further to that area before I can talk of a buy opportunity. This is how you look at the market for you to see what others cannot see. So this Fibonacci, in fact, if I bring it down to the last, it's still the same thing, which means my other block, I expect the market to come down here before the buy. Can you see that? These are trading within daily time frame, 4 hours time frame, which within 48 hours, you can realize the results and go to the next move, because we are looking at what the market is doing all the way from a sell opportunity here, a buy opportunity down here. Before this sell opportunity, we are looking for buy opportunity. You understand? Because some of us will be like, how do I know when to buy? How do I know when to sell? You need to learn how to break down the chart. So from daily to 4 hours, from 4 hours to 1 hour, down up to 15 minutes, 30 minutes. So use them as your entry. You see, so the market needs to break all this area and come down. Needs to, needs to. Yeah, market needs to break. Now all these movements, you have to like which one pays you. If you are looking for scalping method, you can take all this trade just to come down, then stay away until the main opportunity comes in, and from there you kick off. You understand? So as this trade is now, to be specific, so that you not be like you are not here, not there. At 1.1831, I'm expecting market to drop to this area if any other buy will happen. I'm looking at this level and this level, which are so close, which are so close. The market come to this level already, so it's possible you move further down. So you wait. When you wait, let the market come. When the price drop, then take the advantage for the buy. So we are waiting for a pullback before the buy continue. You understand? So all these things, that's all this block can be here for months. So that anytime, any day I storm on this chart, I will see it easily and keep watching it. So that's why it is called a watch list. That's why it's called a watch list. Look at this now. I draw this, and this. I expect the market to come here. It has come. I expect it to come back here because of this. For the pullback, so the market is on a sell trend because I may not draw it, but I see it. You understand? This is a sell trend. You understand? So that I did not draw it does not mean I did not see it. So I'm expecting the market movement. So, and for every sell or for every move, there's always a pullback. So it's the pullback that always creates an entry opportunity for those that did not enter the market early. So here now, what we are waiting for here is entry opportunity. Is entry opportunity. But if it doesn't happen here, looking at our Fibonacci, it might want to come a little bit up to somewhere around there, which is around this key zone here. It might want to come to around there. It might want to. Yes, that's 50% area. That's 50% area. So that's how we break down the market. That's how we break it down. Now between here and here, this is a daily time frame. Is it up to 70 pips? This is 56 pips. So if I use 70 pips, that's exactly 70 pips. So now everything I'm showing us here is how to spot the direction of the market, where the market is expected to go, its final direction. You understand? That's the reason why you wait. That's the reason why you have a watch list, because most times it's not immediately you see the analysis that the analysis is ready to go. No, most times it has fulfilled some conditions and there are other conditions that it needs to be fulfilled. So when you fulfill those conditions, that's when you can take the trade. But oftentimes we even get carried away, maybe because of work. We don't remember to come back and check it. And by the time we check it later, because we have marked it, you will now see that exactly what you want has happened, but you didn't eventually take that trade. That's the reason why traders use order block. You set your order block and go. So in case the market comes, it's going to trigger it even if you are not there. So when you set your order block, you set your stop loss, you take profit. So sometimes by the time you just open your chart, everything has happened. It has triggered, it has hit your profit, and it has closed the market. You understand? And if it is the other way around, it has triggered, it has hit your stop loss, it has closed the market. So it's good you put all this into use because it matters in your trading career. So as this is now, look at this neckline here. It has broken it. Just we have on GJ. So the pullback we are expecting around here and around here. Looking at this is why I'm considering this. But by Fibonacci retracement, that's the reason why you have to choose. Like me now, I look at price level, and when you use your Fibonacci retracement at times, you will see that it's the same thing on the price level you are looking at. You understand? So whatever that happened between here and here, by the time I put my stop loss, I will still be within. And if my stop loss come and hit me up here, because most times I use up to 80, 100 pips. Like if I'm trading on gold, I use 100 pips. If my trade is not going to allow me to use 100 pips, I will not take my trade on gold. And even if it's going to give me that 100 pips, if where the 100 pips will stop will be on a key area, I will not take that trade. It's either I let the trade go or I wait for it to move up further, so that when I enter the market and I set my stop loss will be in a safe place. It is very important. So what do I mean? If I enter a trade here, I'll put my stop loss above this other block here. If I take my trade here, I put my stop loss above this, which is somewhere around here. So I look at the next support or resistance, then place my stop loss in a secure place. But checking the stop loss, does it conform to my risk management? You understand? Does it support my risk management? Does it support my risk management? If the answer is yes, I take the trade. If the answer is no, I don't take it, because I've calculated, okay, I don't want to use more than 2% of my account. I don't want to use more than 1% of my account. Okay, maybe 2% of my account that I'm calculating is 70 pips or 80 pips. But where the stop loss is taking me to is demanding for 100. That means I am breaking my rules. So therefore, I have to wait for that to be accomplished. And when I do that and I take that trade, this is psychology part of the market. And the market is now going against the analysis. You start considering whether to close the market or to leave the market. Some traders will say they will close the market themselves, which is good. But at the same time, you that you have calculated your risk, why do you have to close the market? Why not leave it? Let it eat it and be part of you, because several times market will move against you like that and it will reverse immediately and go and eat your take profit. So you need to get how the market work. Losses is part of the game. So if it eventually eats your stop loss, you take it as a loss, you look for another trade another time, because what we try as much as possible to do is to not allow the market to control us. You should be able to have a control over the market at all time. And you can only have control over the market before you enter the market. After you enter the market, you don't have any control again. So as a result of that, if you are trying to do anything after you have entered the market, you are introducing emotion. And if you allow that to happen, the market will control you. And if the market control you, you are doomed. So if you have done your analysis, you've calculated your risk and you enter the market, whatever that happens in the market is none of your business. Wait, let the market do whatever it wants to do and you move. You've done your technical analysis, you've checked your news, everything, you've calculated your risk management and you enter the market. Oga, go and do some other things. Go and flex, go and do your other work, go and do your other businesses and check the trade later. There was a day I was going for a celebration and it happens to be Friday and I want to take trade. Very early in the morning on that Friday, I run home analysis. I pick about 6 different pairs that I believe they are good for trade and I set my take profit, take stop loss. I am back on the interstate journey and that was all. And now I will open my chart. So many take profits has been hit. Those that have not been hit, they are already on profit. So I calculate my profits, look at what I have left in the market, I close the rest. I am good. I don't have to worry. So that is it. So this trade now, I expect a pullback because it's on a sell. This is a sell market. I expect a pullback of about 50%. Then enter my, because it already sell, then I expect a pullback to enter the sell. Look at this now. Look at, so I've drew this since around July 19. So if somebody take this trade, and the kind of analysis I do, another thing is this analysis are analysis that I do such that at least she'll take you for the whole week. Like looking at this analysis now, by the time it pull back and you enter that sell, that should be the only trade you take on this currency pair for the week. The same thing on that week. That's why you run analysis on higher time frame. So you run your analysis on higher time frame and you're expecting like 2 or 3 candle from the analysis. That will take about 3 days. And where you put your stop loss and take profit, if it doesn't hit it, might take the whole week or even more. I've placed analysis like that lasted for about 3 weeks. I eventually closed it on profit, but it took about 3 weeks. So when you run your analysis on a higher time frame, it gives you peace of mind. It doesn't allow you to be taking trade anyhow. You quickly take this trade, you 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 take it. No. When you take the trade like that, you take it for good and you wait. You have time to go and do other things. Unlike scalpers that they run analysis, look for trade on 30 minutes time frame, 5 minutes time frame. You understand? You run analysis on a daily time frame. Most times it doesn't actualize in the same day. It doesn't. So it actualize second day, third day, depend. So how many trade do you intend to take per day? So all these charts we are looking at, this entry might not actualize tomorrow. And if it actualize tomorrow and enter the trade, the the trade might not actualize completely in the next 2 3 days, probably Tuesday or Wednesday or Thursday. You understand? So that is it. And for the wise, market open on Monday and closed on Friday. But experience shows that traders majorly come into the market starting from Tuesday to Wednesday. So wisdom shows that on what was it called, Monday, so many traders are just waking up, trying to put themselves together. And on Friday, or let's say Thursday evening, some traders are already seeing their own weekend. They prepare for the weekend. So Tuesday, Wednesday, Thursday, majorly. And personally, I've learned from it. But I don't let me, because we still have some traders that will say there's nothing wrong in trading on Monday and on Friday. But I've experienced it. Market just do anyhow. E neither there nor there. Very slow movement, everything slow. Most times you end up in losses. So it's important that you understand how things work for you. But I'm telling you that wisdom says, or experience tells you, you trade on Tuesday, Wednesday, Thursday. That doesn't mean you cannot trade on Monday and Friday. You can do. Sometimes I make profit on Monday, sometimes I make profit on Friday. It's important that you understand how it works. So GBP USD. Whew, I'm expecting more sell on this also. I told somebody on Thursday, that's on the 28th. Was it 28th? And 29. I told someone on the 29th, that's Thursday evening, that uh, the buy on GU is overdue, that is expected to sell. And I showed the person the Fibonacci retracement. So it came into discount area. I was expecting the buy around here, that's 50% equilibrium. So for it to fail to buy to sell here and come here, I was so optimistic that I'm expecting a sell. So I sell this guy. I think I closed about 70 pips on it, and I'm expecting more sell on it, at least to somewhere around there. If anything will happen again. Like I always say, you do your analysis from A to Z, starting from your technical to your fundamental, your risk management, then you take your trade. And when we talk about technical, consider your candlestick chart pattern, your support and resistance, price action, all the key zone. It depends on what and what you use in running your analysis. I see so many things in the market. I've learned so many things, run analysis, and it give me opportunity to spot things easily. So when I see things like that, I make my decision without stress. You understand? So I want you to understand that. You understand? Um, So that is it. I'm expecting more sell on this analysis. I'm expecting more sell. Let me check weekly time frame. Yeah, I'm expecting more sell. I'm expecting more sell. I'm expecting more sell. I'm expecting more sell. So that is it for GU. What do I have here? Wow. So this is what I'm talking about. Discount area. Now, with this now, let's see what will happen on Monday. This is daily time frame. If you have a reverse candle here, then we'll make a sell. So by then it will have given us inside bar. It will have given us inside bar. It will have given us inside bar. Then we look for a sell on this. So what's happening here? There are so many things, just as you have to pick one. Depends on your account size. You determine what and what. And when you are trading, it's better if you already trade GBP USD, if you are looking for another trade, if it's going to have USD or GBP, let it be a currency pair that is significant, that moves well. You understand? Like gold, like GJ. You understand? So that you will not have the same currency in almost all your pairs, and if that particular currency is affected, it will not affect all of them. It's not wise. It's not wise. So if you are looking at analysis, maybe look for one or two, at max three. Like all this analysis I'm spotting here now, I will not be taking them immediately. I can look for only one or two, like tomorrow or Tuesday. On Wednesday, I'll look for another one. On Thursday, look for another one. I don't, so that I do it before whereby I can just select like 10 currency pairs and trade all of them. Though it helps me to learn, because one of the things that help me is that I am not afraid to learn. Even with my live accounts, I take trade confidently. The only thing I will make sure I do is, did I take my time to do my analysis, check necessary things? If yes, and it conform to any currency pair, as in I analyze this currency pair, it confirm, I take the trade. I analyze this one, it confirm, I take the trade. I analyze this, it confirm, take the trade. So sometimes I can take like six. So in the course of trading, these are things you learn. It becomes experience. It becomes experience. You understand? So as this is now, this is pulling back, but where is it coming to? This is a buy. Okay, it's coming to somewhere around there. So it's very easy. I saw it, but I used the Fibonacci retracements to double check. It's coming to somewhere around there. So automatically, if it comes to somewhere around there, what does that tells you? Inverted head and shoulder. You can see inverted head and shoulder. So I'll just leave it here, be watching it. Just leave it there and be watching. Can you see? It's clear now. That's the reason why analysis sometimes failed, or not that they failed, or other factors. Because if you are looking at here now, because of this moving average, you can consider this. But when you draw your Fibonacci, it shows that it's here, and this confirm it, because this is a key zone. So you can place your other block somewhere around there and place your stop loss around there and put your take profits around there. So you'll be having something like this, a long. Let's see, ratio 1 to 2. So you look at it. So this stop loss now is somewhere around there, which you enter the trade here and you move your stop loss to a safe place beyond here and this one, which is somewhere around this other block here. You understand? So it's so simple. All you need is consistency in doing it, taking note of those things, and you'll be fine. So I'm going to stop here. Let me go to gold, because expectation is still on gold. Yeah, I'm still expecting gold to come here before any other move. So that'll be all. So take time to watch it, study it, and I wish you success in this week and in this month. Subscribe, like, share, and turn on notification. This is Future FX Academy. We are trying our best to make life better for every one of us. Bye.